morning, everybody. I'm Andrew Jewett. I'm joined by Matt Miles here, one of our co-founders, Rudy Cortez, another co-founder, and one of our advisors, Luke Skludarek. We wanted to do this live Q&A to answer some of your questions that we've been getting from Telegram, Twitter, and just through the website. So I'll start it off. I think we'll just do a kind of a conversational piece. We'll ask a question and we'll just kind of chat about it. This one is from Bobby from Telegram. What happens to the property coin portfolio if the real estate bubble pops? Matt, you want to handle that one?
Yeah, I'll talk about that one. Good question. So property coin is backed by assets, and the coin holders derive profits from our investments. So, and it is our core business to make property investments. So what happens when the market goes down? Really good question. The first thing to kind of note is we're owning houses only for on average 6 months, because our strategy is to buy the houses in some form of distress before fixing them and reselling to someone else. So we only own houses for about 6 months on average. The other thing is we're buying houses in markets that we think are more desirable than average. So if you hear about, the statistics that are talked about in the United States are, macro level property pricing. Prices across the U.S. went up or down by X%. The markets that we're in, we believe, are more desirable markets. Will have better kind of support levels for the pricing of homes in the markets. That's one thing. The second thing to note is because we only own the houses for 6 months, on average at any one time, we only have, our entire portfolio is kind of 3 months from being liquidated. So we're going to be in and out in 3 months. The third item is, we've bought these houses at what we believe to be significant profit levels. And so I would argue that, a decline in property values in our markets would first and foremost kind of just have the effect of eating into our profits, so make a less profitable trade. If we did lose money in trades generally, that's not the absolute worst thing in the world, because we're going to live for another day, right? We're going to be constantly keeping an eye on what's going on in the market. We're examining properties every day for acquisition. As as the size of our portfolio grows, we're going to be selling on a very regular basis. The primary impact would be lowering our profitability on trades that we own, and where there is some exposure for potential loss, but we're also going to benefit on the back end as the markets go back into an upswing. I don't know, Andrew or Rudy, if you have anything to add to that.
Yeah, I got something to add to that. I think if the bubble does quote unquote pop, I think our portfolio is protected because we're buying significantly below market value. And the significant drops that we've studied won't even affect the properties we're buying. On the other side of it, if the market pops, quote unquote, then that means there's going to be distressed sellers in the marketplace, and we're going to be like in the perfect position to take advantage of those people that need to sell right away, or distressed, or some distress in the marketplace. That is what we buy. So we're going to be in the perfect position to take advantage of that, and basically reset our inventory, buying at lower levels and being able to pick up all these distressed properties. So it's I think on both sides of it, if the property market is strong, we can take advantage of it. If something happens in the market, we're in position to take advantage of that as well.
Yep. Cool.
Yeah. Our answer bled a little bit into our next question, so maybe this is just a further expounding upon that. But Teresa from Twitter asks, can you explain the benefit of being backed by assets? So we touched a little bit on that, but Matt, you want to further go on?
Yeah, couple things. So I mean, look, when we say that the coin is backed by assets, so 100% of the net proceeds are going to be utilized to buy loans and real estate in accordance with our core business, and we're buying those assets because we think that they will earn profits, and when the profits are earned, it's shared with the coin holders. So what that has the effect of doing is a natural increase in the value of assets owned by the coin holder community over time. And we're going to publish investor reporting every month that tells people about, kind of summary of activity that's gone on in the prior month, as well as what the value is per coin of all the assets that we own. And so the value of the coin, the market value, is supposed to be more anchored to the value of the assets owned, and should have less volatility than, there's been catastrophic volatility in other cryptocurrencies recently. And we think that by virtue of being backed by assets, it should be more stable.
Maybe I can just add to this. I mean, what also makes property coin unique, I mean, there aren't really many security tokens, and and I think with utility tokens, you have to create value of the ecosystem, or make people want the token so that they can use the piece of software or benefit from certain access. And if you look at where the crypto currency scene is going, is definitely going in direction of securities. So either the tokens that are currently sold as utilities should be classified as securities, and tokens that are now being launched as utilities are less successful than last year. So definitely the trend in the market is towards securities, and being asset backed kind of puts property coin in the property category with maybe top 3 or top 5 other security tokens that are currently being launched or in preparation for an ICO. And we'll definitely see more of this type of tokens this year, and less probably utility tokens going forward.
Yeah, for sure. We're from our previous experience, in structuring, Wall Street type trades, we've gotten a lot of feedback from our former colleagues and friends that this is really, really interesting, and what we're doing is seems to be the future, and we certainly believe it. We think securitized tokens and securitizing assets on the blockchain is the way that the traditional securities market is going, but is most certainly the way the tokenized and token market is going. So I agree.
Yeah, I want to mention one other thing. Our business of fixing and flipping properties is something people can kind of understand, right? I mean, there's been in the U.S. in particular a lot of television shows about this in the last 10 years, and people can kind of understand taking a beat up asset, beat up house, making a lot of cosmetic improvements, and then reselling that, and why that might make money. That's what we're doing. I would argue that to our knowledge, our coin is the only way for people to invest in an institutional fix and flip platform strategy.
Yeah, that's a good point. Everybody, we appreciate the time. We will be doing these regularly, and we're actually also posting regular Q&As that we produced to our YouTube channel. But make sure you're following us on Telegram, Twitter, Instagram, and then please go get whitelisted so that you're ready to go May 1st. Propertycoin.re. And if you have any questions, please submit them to all of those aforementioned channels, and we'd be happy to get back to you. So thanks so much, and we'll see you again next time.
Thanks, everyone.